Namaste and welcome back to lesson number 5 of Basics of Stock Market, and I am back with another easy to understand chapter. First of all, if you are new to this channel, make sure you hit the subscribe button, like this video if you like what you're watching. So without further ado, let's get started. In the previous video, we learned about candlestick charts. We learned about how the market goes up and down, and today we are going to elaborate on this further. We are going to dig into the candlestick chart and see how the trend is going. What is the trend? Let's see. So this is the chart of Nifty on a daily time frame, and as you can see, this is a candlestick chart. Some days you see a green candle and some days you see a red candle. That means on some days the market went up and on some days the market went down. And this is how the market works, even on a minute time frame, an hourly time frame, or maybe a daily or monthly time frame. The market never goes in one direction. It always goes up and down in the form of waves. And if we look closer into the chart, we see that there is an overall direction of the market. It just doesn't go up or down. It can go either ways, but look closely and you will see that this trend right now, which I am showing of Nifty, it is an overall uptrend. It is going in the form of waves, but it is an overall uptrend. And similarly, it can be a downtrend as well. And if there is no trend and the market is going in the form of waves on a sideways, so it is called a sideways market. Now suppose you see that the overall trend of the market is an uptrend and you think that this is going to continue in the upper direction. That means the price is going to increase with time. That means you are bullish on this stock or Nifty or anything else. You are bullish. Now if you see that the overall price is going down again in the form of waves and you think that this is going to continue, that means you are bearish on this stock or index. That means you expect that the price will further fall down and the trend is going to continue. So remember, uptrend means bullish and downtrend means bearish. Now the third one is when you see that the market is neither going significantly up or going down, but in the form of waves, it's going sideways. That means this is a non-directional market. It is a sideways market. Now all these three things, bullish, bearish and sideways, are the sentiments of the market. That means the overall market feels that the price of this stock or an index is going to go up or down, or it will remain sideways. Now if you're a newcomer in the market, you know that buying a stock at a lower price and selling on a higher price will make you profit. Now think like an investor. If you think like an investor, that is how it should be, and it can only go when the market is going up, right? But if you're a trader in the stock market or in the other markets as well, let me tell you, there are other markets as well, but we are talking about the stock market right now. In a stock market, you can make money even in a falling or bearish market, but only on an intraday basis. You cannot carry forward your trades to the next day. Seems like magic, isn't it? Now I emphasized on the word stock market because there are other markets as well, as I told you. The options market, the commodities market, where you can make money in a bullish market, a bearish market, or even on a sideways market. You can make money with any markets. But for now, we are sticking to the stock market only because you don't have to jump right into the options market or commodities market. They are risky games. But we will learn those in the later chapters. So have patience and remember that all good things to those who wait. If you like this video, make sure you hit the like button, subscribe to the channel and help me to grow my channel. And I'll see you in the next one.